gold is supposed to be there. The certificates could be redeemed for gold at any time. And of course it hasn't been audited since 1956, I believe. Doesn't inspire much in the way of confidence whatsoever. And, I found Scott Bessent's comments very interesting, because if you take a look at the balance sheet of the U.S. government, it's somewhat nauseating, if you will. Roughly $5 trillion in assets, of which the largest, over 40%, being student debt. Can't monetize that. The second largest would be military, the bases and the guns and the bullets. You're not going to monetize that. Land is number 3, I suppose you could, but when you think about gold, which is held, to your point, at $42.22 an ounce, and in the rest of the world, $35 an ounce, in what is called universally on central bank balance sheets, you can't make this up, Jeremy, the gold revaluation account. Right. That's the name of it, the gold revaluation account. And, having the head of the Dutch National Bank for the last 2 years be screaming that we should revalue gold, members of the Bundesbank doing the same thing, and closer to home, Senator Cynthia Lummis from Wyoming, who advocated for revaluing the gold that the Federal Reserve is supposedly holding on behalf of the Treasury to a level sufficient enough to provide liquidity to buy Bitcoin for the strategic Bitcoin account. And of course, one of my favorites, a lady I just interviewed with, Judy Shelton, is advocating for issuing treasuries pegged to gold and redeemable in gold. And so a lot of these things are coming together. There's a lot more that we can talk about this. But for many, many years, gold was an afterthought in this country. And it's not until just recently, like now, that you're beginning to hear about it. In fact, most of my career, Jeremy, the Federal Reserve, the United States was a net exporter of gold. And since November, I wonder if that November is ironic that coincide with the election, we have become net importers of gold. And well, there's a lot more to this that we'll talk about, but the bottom line is that gold has kind of been usurped for central bank financial instruments, and it looks like things are starting to somewhat come full circle in an environment where the treasuries have really lost a good deal of their luster, and much of the world over the last few years has chosen to let those treasuries that they were accumulating to finance our debt roll off their balance sheet and replace them with gold, because after all, gold is the only other tier 1 reserve asset, as reclassified by the BIS in BS, there's a Freudian slip for you. BIS in 2019 as the world's only other tier 1 reserve asset alongside of U.S. treasuries. It's doubled the performance of the 10-year treasury, gold has, over the last 25 years, and maybe most importantly, carries no default risk, no inflation risk, and no sanction risk. So yeah, I think we're beginning to see gold become center stage, and I'd love to continue to pull on that thread if you want about what's going on right now with all of the gold coming into the country, the difficulty getting it out of the LBMA, and all the things associated with it, and maybe with what Scott Bessent is feeling about remonetizing something on the asset side of the balance sheet. Well, it's a different environment altogether. I mean, you could in 33, when Roosevelt confiscated gold, it was a different time. And you're right, he took the gold from the people and then devalued the dollar by 40%, making gold worth $35 from $20. That didn't really benefit the people other than those that hung on to gold. Now in 71, we could argue it did benefit some of the people, right, in the respect that the market revalued the price of gold to where we are now at 2,900 from that moment when we closed the window at 35. I think this time it's very different. This is a time where you have half of the world looking at gold very differently. We've already heard from Dilma Rousseff, the former president of Brazil, the head of the BRICS New Development Bank, that they've agreed in principle to a settlement token called the unit, which is 40% gold backed and 60% BRICS plus currencies. This isn't for the people, this is for the banks and the central banks. When you talk about what the BRICS are doing with the ability for the average person, or B2B, it's going to be BRICS Pay, which isn't about gold redemption. What it is to reestablish confidence in a system that has lost all credibility and all confidence. And if the United States wants to have any chance at retaining its status as the world reserve or as the center of free trade or the pillar that it holds itself on, I think they need to find a way to marry gold and blockchain technology. And this goes, this dovetails with what Zoltan Pozsar has been saying for 2 years now, that we have entered into a system called Bretton Woods 3, which would be a system that would be identified by accumulation of commodities and transparency. And if you look at what Elon has said recently, well, let's put the government spending on a blockchain. Well, how about put the gold holdings on a blockchain? And in talking to Judy Shelton about this, and to another one of your questions that you kind of asked me, I said, Judy, why hasn't the gold been audited at Fort Knox? You want to talk about reestablishing confidence in the treasury market by pegging it to gold. Well, what about the gold that we actually own? Why hasn't it been audited? And she says, you're right, they give lame excuses. It's too much money, too logistically challenged. And I cried BS. So did she. She said, just spend a few $1 million with the United States, for goodness sake, and get it coordinated and get it figured out. It doesn't inspire confidence that it hasn't been audited in a very long time, nor does the way we have behaved, not only in being the stewards of the world reserve currency, but in weaponizing the dollar in the treasury market. This is all about confidence. And if confidence is completely and totally lost, and the dollar and the treasury is no longer demanded to that degree, well, it's really going to hurt the average person on the street. So while this might not directly benefit any of us except for those that have hung on to gold through all of this, it will definitely benefit everyone far more than it would affect everyone. Well, let's put it another way. It would affect everyone a whole heck of a lot more if globally the dollar is no longer demanded and is usurped by some other settlement currency across the globe. And I think people will realize very, very quickly the privilege it's been of being the world reserve currency. And if that's taken away from us, I think those effects would be magnified to the nth degree to the other side. May not benefit everyone, but that would certainly hurt all of us if we lost the world reserve currency. In 2019, I started talking about the BRICS when no one else was. People told me I was crazy. Maybe I was stupid just to say it out loud. De-dollarization, Saudi Arabia pivoting, the BRICS, and I said it in 4,000 YouTube videos over the last 5 years. I feel there's something else happening right now that kind of answers that question through the back door. I mean, it doesn't inspire confidence that we haven't audited it, and when guys like Ron Paul advocated for it, he was shot down. Does that mean it's not there? I don't know. I think it's a 50-50 bet at best, certainly. If it were there, why not just audit it? It belongs to the American people. It should be held in 2 locations, the New York Fed and Fort Knox. If it really is there, it shouldn't be overly burdensome to audit, especially nowadays. That certainly, I think, makes people wonder. But if you look at what they're doing right now, there are things pointing to massive gold acquisition just since November. That maybe is a stopgap for that. Now, look, there's a fine line between conspiracy and reality, Jeremy, and I think we're treading that line. But just since November, since we have become net importers of gold rather than net exporters, the United States has brought in over 12.5 million ounces of gold and over 45 million ounces of silver from the London vaults into the U.S. vaults. JP Morgan is set to deliver $4 billion with a B of gold into the Comex for the February contract. And Blythe Masters, who used to run the trading desk for JP, you can Google it, it'll pop right up. She said long ago, JP Morgan does not buy gold for themselves, it's for customers. Now I ask you, what customers got $4 billion in their back pocket to buy gold with? Let that one sink in for a minute. And there are many other things related to JP Morgan. I might add just one more. You know, they paid a $920 million fine for manipulating the metals market, and it always chafed my rear end that they were allowed to continue to be allowed to be the custodian of the world's largest silver trust, SLV. I mean, that just didn't make any sense to me. They paid a $920 million fine, the largest fine ever handed out by the Justice Department at that point, and yet their trading desk made $1 billion that year slap on the wrist, you walk away 80 million up, and you still get control of the ETFs. HSBC Bank always controlled GLD, but guess what just happened recently? Oh, that's right. JP Morgan now controls GLD. So you have BlackRock and JP Morgan holding SLV and GLD. And when people have asked me over the years, do you think gold will be confiscated? I said, no, I don't. I think if they wanted to take the gold, if they wanted to have the lion's share of it, all they would need to do is say, let's take the ETFs. Now, nobody except the insiders can pull gold out of the ETFs. And I'll mention about that when I'm done. I know I'm kind of going a little further ahead of script here, but it's important. And so the insiders are the only ones that can take metal out of the ETFs. You and I can't. So if indeed they were to close those two accounts, be sitting on this massive stockpile of gold, where right now, in the two vaults that JP Morgan owns, one in London, one in New York, they possess more gold than over half of the dang G20 countries because of this custodianship. They could close those programs, look the world in the face and say, what? We didn't break any laws or infringe any civil liberties. We have the right to do this. We're closing the fund. The money that people had invested in gold is now in their money market accounts Monday morning. They're free to go buy physical gold and silver. It would give them the ability to have their cake and eat it too. Now, am I extrapolating? Yes. Do I know that this would happen? No, but it's a little bit uncanny. And along those same lines, since gold has been on this wild tear, right? It's a little weird that 16 tons have come out of GLD just recently, fallen out. In other words, the conventional wisdom is, well, it's a strong dollar, it's high interest rates, it's profit taking. I call BS again. It's the insiders redeeming their shares for the physical metal and pulling it out to have strategic control of it before whatever happens. So you put it all together, a tier one asset, the massive repatriation, net importers, $4 billion from JP Morgan, 12, all of these millions of ounces pouring in of gold into the New York Comex market. All of this stuff happening, JP controlling GLD and SLV, I mean, under the guise of tariffs. Now, he's not going to tariff silver. He won't. It's a structural deficit. It'll blow up our industry. Is he going to tariff gold? Or is he just saying that to get it all home quietly under the guise of potential tariffs, playing this spread between London and New York profit? Or is it something much bigger? Is it what Scott Bessent is talking about, to monetize the balance sheet? Is it what Judy Shelton is talking about, to issue treasuries colored to gold? Well, if the gold isn't there, how do you get it? Oh, I know. Here it is. And so I would simply say everything inside of me is screaming.
Yeah.
It's a whole hell of a lot bigger than just Trump tariffs.